The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this webinar session for Nadex, an introduction to binary options. This is an introduction session. If you are totally unfamiliar with what binary options are, we are going to go through them. We're going to discuss some terms, some terminology, the basics of how they work, going to show you how you might be able to trade them if you were interested. And I will even be doing some practical demonstrations at the end where I'm going to apply everything that we've talked about and show you. I like to do that. I think helping to connect the dots helps make it a little bit more tangible after you go through some of these concepts. Now, before I jump into it, I do have some housekeeping items that I need to take care of. The first of which is our standard disclaimer here at Nadex. This webinar, as are all of our webinars, I like to say are sponsored by our compliance department. It is actually rather important information. I'm going to leave this up here for a few seconds for everyone to get a chance to read through it, but trading does involve risk, so you should only be putting capital into the markets that could be risked. All trading decisions are solely your responsibility. And then the other thing I really like to point out is that I am going to go through some very real examples, particularly in the end when I jump over to the platform and do a demonstration. And I don't want anything I say today to be taken or construed as a buy or sell recommendation. I am doing this strictly for your educational purposes. And with that, let's go ahead and take a look at what the agenda is for this session. Number one, I'd like to do a 2-minute, if that long, introduction to Nadex. Who is Nadex? What are we? What do we provide? Then I would really like to get into the meat of what we're going to talk about. Specifically, what is a binary option? And I'm going to walk you through what a binary option is, what the definition is, what some of the terms are, how do they work, specifically in regards to risk and reward. And then I'm going to do some examples on some charts that show you how binaries could potentially react as the price of an underlying moves and as time moves. So it'll give you a little bit better feel for how these actually work in the real world. I'd like to go through what your different choices are in these products. And then in the end, this is really where it all comes together. So this is probably my favorite part because I think it's great to be able to show somebody a recipe. Everyone's got their favorite recipe for maybe cookies. But if you're not comfortable in the kitchen and you're not comfortable baking, someone just handing you a recipe to read with some written instructions is nice. But if you could actually watch them demonstrate baking the cookies, it brings it all together. You can visualize it, and then you're a little bit more comfortable stepping into the kitchen and doing it yourself. That's the goal here. Is we're going to go through a slide deck, and then we're going to show you. As I like to say, my mom is from Missouri, or as they say there, Missouri, and Missouri is the show me state. So I will show you. I think, again, it really helps drive home the point and solidify what you might have learned earlier in the session. So let's start off. Who is Nadex? Nadex is an exchange. Nadex stands for North American Derivatives Exchange. Nadex is just such an easier thing to say than a whole sentence, North American Derivatives Exchange. Now, what are we? We are actually a regulated exchange. So unlike other places in the world where you may have heard about binaries, this is actually a US regulated exchange. We are regulated by the CFTC, the Commodities and Futures Trade Commission. And we're actually regulated both as and there's some terms, you'll hear DCM and DCO. We are a designated contract marketplace, and we are also a derivatives clearing organization. So everything that trades at Nadex operates on our platform. We're a proper exchange with all the proper regulations in place, and we actually do all of our clearing. And I'll get into that in a second, but all that means is your money isn't going someplace else. Whatever comes into Nadex, we are able to handle it, clear it all, and handle all accounts because we're regulated by the CFTC as a clearing organization. And what is that we offer? We offer contracts for the individual trader. They're small contracts. Right? Um, when I say they're small, when we talk about binary options, and I'm going to get more into that, and if you just, okay, when we get more into that, they're $100 contracts. These are designed for the individual trader. And again, I'm going to get into that, but I just wanted to mention the cost of entry into these is small. So this is actually sort of a gateway. A lot of individual traders or new traders might come into these markets just to get a feel for how things trade before they want to step it up, or they've got more money they would potentially put at risk in other markets. A great way to sort of test your skills in a very defined and limited risk world with smaller amounts of money, binary options is a way to do so. And the last point, the defined risk fully collateralized, that actually goes into the clearing part, meaning you don't have any out trade or counterparty risk. If you do something and you make a profit, you don't have to worry about getting your money. It all is handled because we are a proper regulated clearing entity. So that's just a couple minutes on Nadex. Now, let's get into it. Binary options. What are binary options? Now, I'm going to just say a few things first, and then we're going to discuss what they all mean. But first, a binary option is a short-term, defined risk, defined reward contract. So they're not long-term options. I think the longest we have goes out a week. But everything in terms of the risk and reward is known before you even get into it. We'll get into that in a second as well. What is that contract made up of? It's a prediction. It's a prediction or a statement, and it has three components to it. So what are those components? An underlying market, the condition for that contract, and an expiration. Now, I'm going to give you one brief example just so you understand what I'm saying is we could do this, say, on gold or oil. Oil seems to be a pretty popular topic now too. Is the price of oil? Oil is my underlying market. My condition, is oil going to be above a certain price or a certain level? And then the expiration, by a certain time. That is it. It is a simple prediction statement. Will oil be above $35 a barrel by the end of tomorrow? Right? Now, we're going to get further into that in a second. And then it doesn't matter with a binary option, it doesn't matter whether you're buying it or you're selling it. The risk and the reward are both capped, but they're both capped, but they're also defined. Before you even get into it, you know exactly what you're getting into. And the nice thing about buying and selling is specifically, you can choose, do I think something is going to be going higher, or do I think it's not? Meaning, I think something's going to be going lower. That is a really important message. I know we've gotten inundated with a lot of questions specifically around that as of late because of the stock market. People have wanted to know, well, what if I just have a little bit of money and I want to predict that the stock market is going to go down? Shorting the stock market can be a little difficult. Taking a short position in a binary at Nadex is not. It is actually pretty easy to do. We will get into that as well. So if you wanted to take a short position, you could do that with binary options. And the way that they trade is they trade in a range from 0 to 100. So everything is priced in a range from 0 to 100. Now, let's actually walk through that a little bit more with a little bit more detail. The statement, it's a true or false prediction. Either the event is going to happen or it's not. So let's use my oil example a second ago. Is oil going to be above $35 a barrel by the end of tomorrow, the end of the week? Why not? It's either going to be yes, it is, or no, it's not. And if the statement settles at true, so if oil finishes above $35 a barrel, the contract will settle to 100. So if it settles at 30, if oil settles at 35.10, it goes to 100. It goes to 37. The contract still only goes to 100. Oil goes back to 60. It's still above my level. The contract goes to 100. If it does not go above 35, it'll settle at 0. Okay, so that's how it works. It's a prediction. What do I predict? Will oil be above a certain price at a certain time? Yes or no? If yes, it goes to 100. If no, it goes to 0. Now, what's kind of cool about that is the price is the market reflecting the probability of an event occurring. So, and I'll get into this and I will show you this as well. If something is trading, say at 50, right around 50, the market is telling you there's a 50% probability that this could happen or a 50% probability that it might not happen. This is people, all the people who are bidding and offering for these contracts. That is the probability at that moment in time. Now, things change. Time goes forward. Price of the underlying price of oil or gold moves, or the market moves, and the probability that the market assigns to that event occurring will change. But you can think of it as a probability that that event is going to occur or not. Now, as I mentioned, if you are familiar with other listed options, time and volatility are factored in the price. If there's a lot of time, it gives the chances of that event occurring a different probability than if there was a very little amount of time left. The probability of it occurring or not would be different. And if the market is extremely volatile, that will also impact the people's perception or the market's perception of the probability of the event occurring or not. So let's look at the risk reward of binary options. I mentioned that it trades in a range from 0 to 100, and the price at any given time is the market's pricing of the probability of the event occurring or not at that moment in time. And as I said earlier, these are small contracts. They're only $100 in value. Okay, so that's the total value of the contract is $100. So let's actually look at what it is. How does the money work if you trade one of these? And when I said that doesn't require a lot of capital to trade one contract, is your collateral, what you have to put up is the maximum money you could potentially lose in the trade. That is our way of making sure that there's never counterparty risk. Everyone puts up their maximum risk until they close their position or until it settles. So let's actually talk about what the what that actually looks like. All right. Now, if I were to buy a contract, okay, do I think the Dow Jones or do I think the Dow Jones is going to be um, above 24,000 at the end of the day? Okay, that's a prediction. That's my contract. Is the Dow Jones going to close above 24,000 at the end of the day? If I think it is, and I were to buy a contract, if I were to pay 40, all right, I think there's a 40% chance and someone sells it to me, all right, my collateral, I paid 40, I would have to put up $40, all right. I paid 40, that's the most I could lose. I put up my $40. Now, somebody had to have sold it to me. There's always two sides to a trade. Somebody else thinks I'm crazy and they're saying, no way is this thing going to close above 24,000 at the end of the day. I'll sell it. Now, since this contract can go to 100, if they were to sell it at 40, their collateral is the difference between 100, which is what the contract could potentially go to, and the price they sold it for. Since they sold it to me for 40, they're going to have to put up 60. All right. And so my $40 plus their $60 equals $100. The contract is fully collateralized. Nobody's going to have any out trade risk. I've put up 40 and I could potentially make 60. They've put up 60 because they sold it, but they could potentially make 40. So hopefully that made sense. Now, that's actually was me walking through the reward side of it as well. If I pay 40, my reward, my potential reward is 100 minus what I paid for it. So if I'm buying it, if I pay 40, 100 minus 40, I could potentially make 60. And the person who sold it, he sold it at 40. That's the most they can make. But 100 minus 40, 60 is what they could potentially lose. That's the collateral they had to put up. It's pretty simple math. And remember, so whatever I pay, somebody else, if they sold it to me, had to put up the difference to make sure that there was $100 there. If the contract were to settle at 100, whoever was on the correct side of the prediction would get the $100. So hopefully that made sense. Hopefully I didn't confuse you. I am going to show it to you on the platform. We make it super easy for you. You don't have to be doing any math or figuring that out. We show it to you. I just wanted to walk through how it basically works. Now, this is an order ticket for a binary contract. This one, if you take a look, this is the example I pulled is now we don't have the licensing rights to use their brands, but all of our contracts settle to a futures contract. We are regulated by the CFTC, so you'll see us use terms like US 500. That is the S&P 500. This contract settles to the S&P 500 future. Now, in this particular order ticket that I brought up, the question was, will the S&P 500 be above 26, 25, 50 at 415? All right, and maybe that was yesterday because I think we're higher than that now. We've rallied. Now, what do you see on the order ticket? You see a price that you can sell it at. That's the bid price, but that is where you could sell it. And there is an ask price, the price that you would have to pay. Now, if I wanted to trade right in between these markets, all right, I don't have to trade right between them. In fact, I'm going to use the middle point. Notice how I put a price in this order ticket of 51. Right? And because you can see the buy side of the ticket is highlighted, this was an order to buy at 51 at that moment in time. And in this prediction, if I were to buy at 51. If I were to actually put this into the system, and I will show you this, that 51 would show up here because it's a better bid price than 49 and a quarter. I might not buy it, but somebody in the marketplace could see it and they could sell it to me. If I wanted to buy it right away, I would just pay 52 and a quarter. But let's walk through this. If I were to pay 51, I put a bid in for 51, I think there's a 51% chance that it will settle. The S&P 500 will settle above 2625.50 by the end of the day. If I bought it, since I paid 51, that's the most I can lose. And notice how we give you the maximum loss right on the ticket. Now, what's the most I can make? Since it could only go to 100, the most I can make is 100 minus the 51. The most I can make is $49. So here in this prediction, if I wanted to wait until expiration, if I bought this and I really thought my prediction was right, I would be risking $51 to potentially make 49. Will it be higher than this price at this point in time? Now, if I were to sell it, it would be the exact opposite in terms of risk reward. If I were to say, I don't think it's going to be above 26.25, I think it's going down or it won't go that high, I could sell one at 51, and there, if I sold it at 51, that would be my maximum profit. I couldn't make any more than 51, but if it did go above there, I would lose 49. So this would be the exact opposite. That is how you would take a short position, say on the S&P 500. All right, oops, I clicked the wrong way in there, and there it is. So the order ticket, my statement. Will it finish higher? Yes or no? The price, which is the market's prediction of the probability at that moment in time, and then the price that you put it in, and your risk reward is calculated for you before you even enter a trade. Everything is done for you on the system. Now, I'd like to walk through some examples so you can see how the price of a particular binary might change as the market changes. And I find this is kind of useful and handy. So let's go ahead and take a look at what happens as time moves on. All right, and I can't emphasize this enough. I really like thinking it as probability. All right, so I've walked through this slide already. I think I've kind of driven this point home. It's the market's probability of an event occurring. Now, the price of the contract doesn't have to move with perfectly in sync with the underlying. All right, so it's not going to be, hey, the underlying ticked up, so the price is going to move exactly that amount. The price of the binary option will fluctuate based on time to expiration and volatility and other people's expectations for what might happen. So, just be aware of that. But time to expiration and volatility will impact the price of the binary option. So let's look at that on a chart. So here's the first example, and here's a chart of a currency. The euro US dollar forex pair. And in this particular prediction, the question was, will the euro finish above 114 at 3 o'clock later today? So there's the line of 114. That's the binary event. If it settles above 114, this contract would settle at 100. If it settles below 114, it would settle at 0. So let's take a look at what would happen or what could happen to the price of the binary option as the day goes on and as price fluctuates. So early in the day, all right, and you can see that over here on the left, you might see a bid-ask spread of 54.58. Why is it higher than 50? Well, at that moment in time, the price of the euro was above 114 already. So the market at that point in time was predicting there was greater than a 50% chance. In fact, they were giving it a 56% chance, the midpoint, that it would finish the day above 114. However, as time went on, we moved forward, the price dropped. All right, it dropped down here, and you would potentially see a price of the binaries around 44%. Now it's lower than 50%. Sure, it's below the 114 line. It is currently trading below, and so the market is predicting only a 44% chance that at the end of the day, it would finish above 114. Now, let's just skip ahead. The market kind of chopped sideways, and right around the same moment in time, I mean, the same price level, and you can actually see how, okay, yeah, it went up, it came down. I'm trying to just show you where we are, but here we are. It's roughly the same level it was back here, but now the market is only giving it a 36% chance. Well, why is it only 36 here when back here it was 44? And the reason is there's less time. Here, when they were giving it 44, there was a whole day ahead. Here, half the day has gone by and we're still below the 114 mark. So as time moved on, the probability that the market was putting on it finishing above 114 dropped. All right. You could think of that, if you're a regular options trader, as time decay. The probability started to go lower. However, as time went on, it did go back higher. Now, notice here, I mean, the price of this binary fluctuated much more quickly and a little bit more dramatically than it did earlier in the day. Notice earlier in the day, it was around the same part and they were giving it a 56. It dropped down below and it only dropped to 44. Skip ahead time, and it was still the same price and we're at 36. But when it went back up above, the probability of it finishing now was all the way up around 74%, because there wasn't much time left in the day. But notice it went from 36 to 74 pretty quickly. Back here, because there was so much time left, the price didn't fluctuate as much. So you see greater fluctuation in the probability and therefore the price of the binary as you get closer to expiration. In fact, look at this when it drops down below. I mean, look how quickly it dropped. I mean, you can see it's making 50-point probability swings as it moves around your prediction price. It's making as you get closer to expiration. And then as the day went on and it actually finished, it did close above 114 and it eventually settled at 100. So this is actually what people are looking for when they're trading binaries, is the opportunity to get in on price action with small amounts of money based on their prediction of what might occur. Now, we're going to get deeper into this when I show you on the platform, but I wanted you to see how the price of the binary could fluctuate throughout a day, and how the volatility in the price of that underlying fluctuates based on price movement of the underlying and time as you get closer to expiration. Now, here's another example. Let's just kind of look at this because it makes it a little bit cleaner. We're not flinging all the way through the price up and down through it. Here, it's the same prediction. Is it going to above? But here on this chart, it never goes above. All right, it never goes above. It stays below this all day long. Early in the day, we were 44%. Hey, there's a chance it could have gone higher. As the day goes on, it really hasn't done a whole lot, and the probability of it finishing above 114 has dropped. As time goes on, look at this. Here, it's even moved higher than it was. At midday, they were giving it a 34% probability, but it's actually gone higher. All right, the price of the underlying, all right, of the euro to the dollar actually went up, but the probability, the binary option, actually went down, because this moment in time, at this moment in time, the market is only giving it a 20% chance that it's going to make it back up above 114. And the reason that is because there's such little time left to expiration. And if it never makes it above, it simply goes to zero. All right, and it would settle at zero. The person that bought this lost what they put into it. The person that sold it would collect their reward. All right, so you can see how the price of the binary can fluctuate throughout the day. Again, this is a much simpler way to see it. As time moves on, um, even as the price never even goes through your prediction level. Let's take a look at the flip side of it. What if it never goes below? All right, and you're going to see the same behavior. All right, at the early in the day, it's above that 114 level, and yeah, you've got a higher than 50% probability of it finishing because it's already started there. As the day goes on, even though the price of it has dropped, so the price of the euro to the dollar has gone lower, because at midday it's still above 114, the market might give this a higher probability of it finishing above 114 because there's less time left and it's still above the level. As you move forward in time, that probability will continue to go up toward 100 until the end of the day. Now, interestingly enough, I probably could add one more slide here. It can go from that 70, right here at that 78, that 80 level, and it could be right here at the end of the day, and there could be 2 minutes to expiration before this thing's going to settle at 3 o'clock, and something may occur. And this thing can go from being essentially what would appear to be 100% probability, and it could, if it's settled at 113.99, just below, the contract goes to zero. It would go from 100 to zero in a blink because it went below. So you can see that the volatility of the price on the binary can get pretty dramatic when you come right up to expiration. So let's talk about the different price levels, and then I want to talk about how you could potentially trade these in the market, and then let's do the practical demonstration. Now, for each underlying market, and we have a lot of different underlying markets for our binaries, and I'll show you those. Foreign exchange pairs, indexes, global equity indexes, commodities. We even have event contracts. A lot has been discussed lately on economic announcements, jobless claims, GDP, unemployment rates. Do you think the number when they announce it's going to be above or below a certain level? And it's been pretty popular lately, particularly because everyone's been looking at the economy and really been paying attention to those government announcements. But we've got binaries across a bunch of different underlying markets. And for each one of those, we've got different time frames and different prediction levels, different strike prices. So you have plenty to choose from in terms of how do you want to make your prediction. And in the cases of extreme volatility, I like to mention this now. As time goes on, we may have to add new levels, new strike prices, new conditions, because the market's moved around so much. We're going to give people some additional choices. So you can always take a look because we're doing that on the fly. Now, a quick little example, just because a slide, but when I'm on the platform, you'll be able to see it much more cleanly. But here's that euro US dollar choice for binaries. You can see how we have contracts that last 2 hours, and it gives you the countdown to the clock. That top one, when I took this example, it was going to end at 4 p.m. There was only 9 minutes and 35 seconds left. Now, what does that tell you? Based on the price of the underlying, you could see some pretty big volatility in the price of the binary. But we've got daily contracts. We've got, and we tell you when they're going to settle. We give you a countdown clock on the timer. We've got weekly contracts. In fact, in currencies, we've got 5-minute contracts. In equity indexes, we got 20-minute contracts. So there's plenty of different time horizons for you to choose from based on the price action that you're looking for. And then we'll have a bunch of different strike levels. So, which is the level that you're making your prediction. Here in this particular euro US dollar currency pair, the ones we had were 108 and a quarter. Is the euro going to close above 108 and a quarter? Yes or no? Is it going to close above 107 and a quarter, 106 and a quarter? These go up and down, and the probabilities and the prices, the markets are listed right next to them. And it's kind of logical. With the euro and here, it actually we give you the indicative price at the moment. It was current at that point in time. It was trading 107.86, so it was above 107 and a quarter. And at that moment in time, now this was a weekly contract, so there were still 2 days, almost 3 full days left, 2 days and 23 hours. At that point in time, the market was giving it, a 73% chance of finishing greater than 107.25, but they were only giving it a 34% chance, right in between, that it would finish above 108.25. So there's different levels for you to predict, and you can choose the right contract, time frame, and level that suits your trading style. Now, there's something that I'd like to point out with binaries, and this is probably one of the most important things that you could take away from this session. And this is actually true for almost all trading, but really with binaries. And I want to hammer this home. Just because there's an expiration associated with the contract does not mean you have to wait to expiration to see what happens. I'm going to say, just because there's an expiration, this expires in 2 days, I do not have to wait and see what's going to happen. Was my prediction correct, or was my prediction incorrect? You can choose, it's your choice, to exit the position before expiration, and you can exit it either for a profit or a loss. So if I bought something because it had a 30% probability of something happening, I thought it was going to go higher, I pay 30 for it, I could potentially make 70, and let's say later today it's at 50-50. All right, wow, all right, I was right, it actually went right here. What's going to happen? I could change my mind and say, you know what, I'm going to sell it at 50. I'll take my $20 profit and be done. Now, I could wait and see if I'm right or wrong, and if it does settle above my level and my prediction was right, okay, yeah, I missed out on another $50 of potential profit. But if it settles below, I lost everything. It doesn't have to be an all or nothing situation. A lot of people call binaries all or nothing. They're only all or nothing at expiration. It's either yes and it goes to 100, or no and it goes to 0. That doesn't mean that you can't trade it throughout the time horizon of that contract, because your opinion might change. You're not stuck or married to the position once you've done it. You can always say, oops, I was wrong and I want to cut my losses, or wow, I was right. I'm going to go ahead and take my risk off the table and take my profit. Thank you very much. Let me reassess and maybe do something else. That is an important rule. I can't emphasize that enough. If you don't take anything else away from this, when you're trading binaries or any of the other contracts at Nadex, you can always choose to exit the position earlier if you want to. All right, if that's your choice. The last thing I want to put up here is before I jump over to the platform and do a little practical demonstration. And believe me, the practical demonstration is definitely well worth it. I'm not going to spend a lot of time there. I do getting started and welcome sessions at Nadex for navigating around our platform every Wednesday, but I want to show you specifically binaries. I think it will help bring it all together. But before I jump over there, we are here to help you. We are here to help you. Contact us. There's a phone number. We've got people 24 hours of the day to help you. We do have a follow the sun desk, and if you've got any questions, need any help, setting up an account, funding your account, questions around the products, curious about functionality, how do I do something, any programs, incentive programs we may have going on, give us a call, shoot us an email. We are here to help you. All right, now the next part of this session is going to be uh, on the platform. So give me a second. And by the way, I know there's some questions that have come in, and if I don't get a chance to answer your questions, please I reach out to our team. Our team is there, and I will actually look to follow up with everybody if I miss your question. But one of the questions is what do these things settle to? They all settle to a futures contract. All right, so everything settles to a futures contract for all of these. Now, let me go ahead and switch my screen. And let me flip this over so that we can do a quick little run through the practical demonstration. Let's get into the kitchen and bake a little bit. All right, here we go. We are on the Nadex website. Stay tuned here. We got a new website coming. We're pretty close. I think maybe a month away. Got to be nice if we could do it a little bit sooner. Really cool. I think you'll like it. Along with our new website, we've been working on a new platform, and we've been working on all sorts of new contracts. Lots of fun and exciting things going on over at Nadex. Now, when I log in, I'm going to go up here to the left, to the right-hand corner. And I always try to show you where I'm clicking. I click login. And what I'd really like to show you, I know that people just generally log into our what I'm going to call our older platform. And right now it says join the beta. That beta is going to be our main platform very soon as well. And I'd encourage you to actually start using it, playing around with it. I think it's a lot cleaner, easier to use, more intuitive. So I'm going to click on join the beta. And you'll see the new Nadex experience. Much cleaner, very simple to follow. The products and market classes over here on the left, my workspace, which will be my charts right in the center, my account orders, positions, what have I done down below, and an order ticket will pop up on the right. Now, if you don't have a Nadex account, notice up here, I am in a demo account. If you've never traded before, I would very much encourage you, open up an account, get a demo, and play around with the demo environment a little bit. The markets mirror live markets. The experience will not be the same as trading live. So, because not everybody is in demo, not eyeballs are on it. It's not a live market, but you'll get a pretty good experience on how it works. Now, on our binary options tab, and that's all I'm really going to be looking at, notice that we've got index products, as I mentioned, global indexes, the FTSE 100, the DAX, the US Tech 100, the NASDAQ, the S&P 500, S&P 500, US 500, the Russell 2000, the Dow Jones. And there's plenty of different time frames. And if I were to pick one, let's just go ahead to the daily on the S&P 500. You'll see all the different expirations that we've got potentially available for you to choose from. I did mention we do have short-term contracts. Notice the 5 minutes. If you click on that, you're going to get some 5-minute currency pairs. Lots of price action, lots of excitement. Some people really like to get in on that tail end. Notice how these are going to all settle and expire in 1 minute and 1 second. So if you really want things moving around, there's some place for you to look. We have 20 minutes for our indexes, and you could take a quick peek. Looks like the market's actually rallied. All of our index prices are giving it. I'm pretty certain it's rallied. Because I don't want to have all the volatility. For an example, I'm going to pick something that's a little further out in time. So let's go ahead and look at the S&P 500 daily. You know what? The weekly, I think that actually, yeah, you know what? I'm looking at it. I always forget. Our daily and our weekly are both going to settle in 3 hours and 30 minutes. That's today because tomorrow's a holiday. The markets aren't open tomorrow, so those contracts are actually going to be the same. So I'm going to go ahead and choose the daily, and let's just choose one that's roughly at the money, 27.95. When I click on that, it will bring up my chart. I'm going to go ahead and move the contracts aside, and let me take off um, all these drawings and things that I've done on here. I cover more of that when I do a welcome session. And if you want to go and take a look at our website, and in fact, I'm going to go back over there in a second, and I'll show you where you can look. You can see um, where you can watch some on-demand recordings of some other educational content. But here's a 1-minute chart, and I can zoom in and zoom out, and I'll do. You can always play with this yourself. But what I really wanted to show you here is here's this particular contract on this chart. It's a binary. Here's the S&P 500 as it's moved around. It gives me an indicative price right now. It's right around 27.95. It's right there at, just below the level. And notice that the market is currently pricing this as, God, look at this as it ticks down. It's giving it, 43%. Notice how this is jumping around quite a bit because the indicative price of the future is jumping around a bit, and expiration time is coming up. Down below, you'll see another contract. Is it going to be above 27.71? When I click on that contract, notice that brings that into the order ticket over here. And yeah, it's well above that level right now. So they're giving it a pretty high probability that this is going to finish above 27.71. And let's say I think that that's actually going to be the case, and I'd be willing to buy one, and maybe I'd be willing to buy one for 78. I'm going to click buy. So I'm on the buy side. And I'm actually going to put 78 in there because that's my price. When I put 78, it's in between the markets. I don't know if someone's going to sell it to me or not. Remember, this is a demo environment, but it tells me I could potentially lose $78 on a one lot, but I could potentially make 22, but it's a pretty high probability trade. I'm going to go ahead and place my order. And notice when I placed my order, my order was received. Terrific. And notice in my orders, I see I'm trying to pay 78 for it, and I actually see it here in the order book. Now, the market moves around. I may end up buying it. I may not. So you can trade between. And just like I could trade between, or at least try to trade between, remember, I also don't have to wait. I could let's say I still thought it was going to go higher. Let's go back to this 27.95 one. All right, we're right there. I want to buy one. I think it's going to be higher. I'm going to go ahead and buy one for 69. Let's just place an order and buy one. Oops, look at that. The market moved and I missed it. Let's make that a market order so that I get it. All right, I placed a market order and I got filled at 70 right away. By the way, you'll notice that I did buy that one for 70, and I still have that order for 60 for 69 below. I might want to cancel that order, so let's go ahead and delete it. So I just canceled that order. So you can't. It's pretty easy for you to see what do I have working in the market. What positions do I currently have? You'll see your 24-hour history. If you've been playing around and doing a lot of things, you can quickly find that out. And again, any one of the markets right here on the charts tab, I can open up, populate an order ticket, and trade right here with it telling me. And if I wanted to get out, all right, I was wrong. I paid 69 and I think I'm wrong. Maybe this thing is going to go lower. I click sell. Okay. In fact, if I want to, I can actually just unwind the position. I'm going to go to my position, click on it. I'm going to click sell. I want to get out. All right. I made a mistake. Let's just go ahead and liquidate. I don't want to take the loss. I can place my order. Oh, you know what? Again, I placed a limit order. I got filled. I'm out. I didn't wait until expiration. I decided I made a mistake. I went ahead and just took my $6 loss. I didn't have to take the whole $69 loss. It's important to understand that you can get in and out of these if you like, if your opinion changes, if the market changes, whatever it is. Just like I took a loss here, if it had gone my way and I wanted to take a profit, I could have done that as well. Before I let you go, I would like to show you this on the Nadex website. Again, we have a new website coming, but I would like to point out in our webinar section, uh, under on demand, you can see there is some educational content up there that you can watch at your leisure. So if you want to do a little binge watching of Nadex educational content, it's available to you. We're constantly adding and building it up. It's also available on YouTube. This is also where you'll find what's coming up. Notice that I've only got things out through next week. I'll have to put some more for the week after that. But on every Tuesday, what's hot and what's not, you get a rundown of what's going on in the markets, and get some market analysis early on a Tuesday. Like I said, for people who are new to Nadex and would like to do a little deeper dive into the platform, we do that every Wednesday. And here next week, we're going to be doing some more on knockout options. We've launched some interesting call spreads and knockout options. And you can join my colleague, Dan Cook, for those contracts on gold and oil. With that, again, if I didn't get to all your questions, I want to encourage you to please reach out to our to my colleagues. They are here to help. I'm going to put that slide right back up. Call us, email us. We're here to help you. Ask questions about incentive programs, particularly if you're new. I know they're running some, we run an initial deposit incentive program. Be sure to tell them I sent you. Say, Todd sent me. He said, ask about this incentive program. And any questions you've got, they're there to help. We're here to help you. Hopefully, you got something out of binary options and you were able to follow the basics of binaries and feel a little bit more comfortable in what they are and how you could potentially use them. This session was recorded. It will be available in our on-demand library, hopefully within a day. Sometimes it takes a couple of days for it to render for us to get it up there. And with that, I want to wish you all good luck in the markets.